Alrighty. Let's get into it. So I have a few trades to go over today. All these trades were from New York session. No trades in London today. And now I know right away I'm gonna have somebody like, "What do you mean New York session, Mike? I thought you had high impact news in New York. I thought only degenerates trade news, right? So you are a hypocrite, Mike. You big old hypocrite." No. Here's the deal. Yes, I believe if you hold through high impact news when it's released, yes, you're a degenerate. I do believe that. Okay. I know some people, they swear by it. "Oh, I make money, Mike." Okay, cool. But guess what? Especially if you're now if you are trading, not to kind of get too off track with this lesson, I'm going to the trades here in a second, but I kind of want to touch upon this as well, because when I say this, I have some people to just throw a fit, right? Just throw a fit over it. They don't throw a tantrum. Now, if you are taking full size during news, then yes, there's no debate on it. You are degenerate, because it hits that stop, then you're not going to be saved. A lot of you don't have that issue. I get it. A lot of the beginners that want to try to go back and forth with me on this when it comes to news, they want to, try to prove they're right. It's price. It goes to where it's going to go. Like right now, you may be in a paper trading account, okay, or you might be trading with a prop firm, and so that does, like, you're not in a real environment, so you don't understand this. But guess what? Your stop is not going to be respected in that environment. Okay, your stop loss is the best possible price that you can get in an environment like news. You're not going to be most times getting that best case scenario, guys. Okay. And then, so if you are going to trade news, let's just say you want to be a little bit lesser of a degen, then at the very least, lower that size a lot. Okay. My advice, don't even mess with it. But that's, just my take on it, right? So as I was saying, I'll trade before news, I'll trade after news, but not during it. So on these particular plays today, we had, it happened after news. We're going to start with Euro USD here. So what's the deal on Euro USD? Well, we had that higher time perspective coming to the day. What was that higher time perspective? So right away, first things first, I was leaning bearish, of course. I was leaning bearish because we took out higher time frame buy side right here, and we had like the super weak close. If you look at like Thursday, each candle tells you a story. Okay, each candle holds information, and the information that it's given me from Thursday's close is it wants to move lower because it took out external range liquidity being this buy side. It had a weak close and it created internal range liquidity in the process. So I understood right away, as I was talking about with my mentees on Friday today, but again, I'm releasing this tomorrow, so that's why I'm talking in the past tense, right? So I was looking for this to seek a discount, which it did. All right, it came down to a discount marketplace. So for the most part this morning, the early part of London, like, I was leaning bearish on this thing because of that reason. But what happened here was, okay, we came up and we took care of Asian session highs, significant buy side liquidity pool. But then what happened? This thing dumps. You get a really, really big flush from news that sends this thing lower, and it takes out Asian session lows. Okay, or it actually already did take out Asian session lows early on, which is why we had this push up, but it takes out low of day, which is this big sell side liquidity pool right here. Okay. It's already taken out Asian session lows. We did that earlier, but now it's taking out low of day, and it's moving down into that daily discount that I was just talking about a second ago. Okay. But here's another key thing here. A lot of times, not all the times, but a lot of times, the first run that you see from news is a fake run. And I see this thing dump. And I understand that it's coming down to a daily discount. I understand that it is coming down into a institutional price level, which is right here, that 0.0 level. And at this point that I get this flush here, and it comes down to a higher time frame 4 hour inbounds, of course, as well. At this point that I see this, I'm just waiting for confirmation. I know exactly what I'm looking for at this point, exactly what I'm looking for. Because now it's considered a bargain price in the short term. Okay. So it's moving lower here. And then you can see, if you look close, we get this fair value gap right here, but I don't get I need that strong close above a short-term high as well right here. And you can see it actually gives the close up here. You see that? You see you actually get that close, and or actually, right, my mistake, look right here. You see that short-term high? It gave it right there. It's where it actually closed. You see that right there? So at that point, we get the fair value gap. We got the strong close. What is that called? Well, that's called a shift in market structure on the lower time frame chart, on the 5-minute chart. So once I got that, what's going to become my draw? What's going to be my draw once I get that confirmed shift like that? What's my draw going to be next? My next draw is going to be that internal range liquidity up above. Okay, now, and as I made clear, I would say ultimately, yes, it's like it could come and take these highs, but that's a bit aggressive for me. I'm not trying to shoot for that. And especially in this case, since this one actually did take Asian session highs already. Now, GBP USD and a few others, of course, that differed in this specific case. But with this, it created internal range liquidity on that push lower. Okay. From news, of course, if you go to the 15-minute look at that. That's a 15-minute bearish fair value gap. That is a draw. This push lower that you see from news, of course, because news is explosive, high impact news. It was too fast. It was too extreme. It was too explosive. It did not have a chance to efficiently deliver this price action. So price is not going to want to leave that like that. And again, remember what I just told you. Don't forget that a lot of times that first move that you see from news is a fake run. It's a turtle soup. All right. So we got that manipulation move to the downside right here. It's taking out the sell side. It's in a daily discount, and it comes down into an institutional price level where major market reversals tend to occur at, leaving behind this inefficiency in price that I understand. Now that I got this 5-minute shift right here off the support, that becomes my draw. This inefficiency right here, that is my next draw on liquidity. Takes external, seek internal. Okay. Look, shift, pull back into a discount, and then it seeks this inefficiency up above. That's when I lock in gains. Low hanging objective. You could have shot for a little bit more. You could have even looked for it to rebalance this price action. Like, that's valid. That's the thing here, guys. Like, there's not one way to do it. I like low hanging objectives. I like singles meaning low hanging objectives. But you know, people think that my strategy, the way that I trade, is just like 1-to-1 or only 1-to-1s or only taking singles. As we saw with several of these plays today, you could have got massive risk reward, awesome risk reward, 2-to-1, 3-to-1, 4-to-1. You could have got, and that's what, like, my strategy, it does provide that as well. And my strategy, of course, is market structure, liquidity, and time. That's what I do. Market structure, liquidity, and time. If you want singles, you can get it. If you want bigger score, you can get it. It just, you got to understand the structure that you're operating within. You got to understand the liquidity that's been taken, and it allows for it. Now, again, what comes with bigger risk reward typically is more losses. People don't talk about that. I get it. You know, because of course it doesn't sell courses. You know, they want to sell that you can have a huge risk reward and then have a high win rate. Not going to happen. Okay. But it's available to you, and you had these opportunities today. Okay. So I took the low hanging objective. That's just what I do. But you could have milked off some really good winners as well if you wanted to be a little bit more aggressive when holding it. Because as I was telling my mentees on mic today, you could shoot for that. You could look for it to come up and, you know, have a deeper move. I'm content with that. I'm content with that low hanging objective. I'm fine with that. All right. But that's what we had on Euro USD. Now GBP USD it's like across the board on these 4 plays. It's like the same type of setup. Really, it's like literally identical type of setup. Now GBP USD, like, it came down. Again, we had that same perspective from the daily chart, the higher time frame chart. We had that, it took out that buy side right here. It had this 4-hour shift, and then it reversed lower to see this internal range liquidity down below. We talked about that. That's what we were anticipating on Friday today. And then it came down and it rebalanced this price action. It came down to a daily discount. And the thing is also on the daily chart, it completely rebalanced that daily price action that it created on that push up right here. Completely, not slightly. I'm talking about completely rebalanced that. That's major. That's that. Now we're talking about some major support here, guys. And 4 hours, same deal. Okay. And again, we understand first move from news, a lot of times it's a fake run. So I have this thing coming down right here. It takes out sell side, but it also is going to create further bias at above this high, which is going to want to take here soon, I'd say. And that was the case, guys. And another bonus to this is I still have Asian session highs above intact as well. That's not my target, but it is, I like having that liquidity there still valid, because if it's valid, it's able to serve as a draw. So I have that, but it's not my target, of course, because the price can only do so much by 5 o'clock, and I got to be out by 5 o'clock, which is the end of New York. So we have this push up. It creates this fair value gap after having that flush down into a discount. And then look where it found its support as well. 80 institutional price level. 80 institutional price level. You don't know what that is? Search my channel. Search my channel for institutional price levels. I have videos on it. Magical levels. Magical levels. Don't take my word for it. Go study it for yourself. Look at the respect it has for them. You'll see it for yourself with your own eyes. But that's what we had here. It came down to that. discount, found support, and boom, we get that fair value gap right there. And then you can see we get the strong close. Look, you see that push up right there? It gets that strong close, and then it does provide us with a pullback here. Now, this one I did a little bit differently. I was a little bit more aggressive. Now, when I say that, I didn't break my rules or anything. And I made this very clear when I was talking with my mentees this morning, or during the third live stream session today, that you could, like, it's up, like, you could even, like, even this high right here is technically valid, but I'm not really trying to shoot for all that, because I understand that price it can only do so much by 5 o'clock. I'm not saying it can't take it, but I mean, it would have to really accelerate, really have a big move. And the thing is, like, this fair value gap is still resistance. That's the thing. It's internal range liquidity. Okay. So you got to understand that. You got to have that mind frame. So the thing is, like, that's valid technically because there's buy side residing there. It's a liquidity pool. It's probably to be taken, but the question is, can it do it by 5 o'clock? And you're kind of stretching it, right? So with this case, I went with this 20 level because that's an institutional price level. Just like you have institutional price level support, you have resistance. Look, I have that level right there, that 20 level. And then I had the shift. That's what I wanted to seek because it's also in a premium marketplace within this 15-minute range. So it took external, and I look for it to seek internal, look for it to seek the institutional level in a premium marketplace within this 15-minute range, within this 15-minute displacement. That's what it did. You can see it provided it to me. Now, we have ICT USD right here. What is the dealio on ICT USD? Same deal, guys. So we came down and we took out higher time frame sell side, and we came down to that imbalance right here. You also got some old high. Look right here. You also have old high support right here. Whenever you have old highs like that inside of an imbalance like that, it's a very sensitive level. So it's a very sensitive, it's just amplified as support. So we came down into a discount marketplace. No surprise. News just accelerates this thing lower, and it comes down. It takes out low of day. It also has Asian session high still up above intact, which is a bonus for this for our buy setup. So it come down, we take out this, it's selling off. And then we come down to the old high support as well, higher time frame support. We have the shift right here, or we have the fair value gap, and then we get the close right there. Once you get that close, it's confirmed. I need both. I need the fair value gap, but I also need a strong close above a short-term high for a confirmed shift in market structure. And then it gives a pullback into a discount right here for us. And on this one, how I approached it was there isn't like a lot of significant resistance right here. I mean, we've got the imbalance, of course, but I ended up taking profits on this up into that 6005. Just because that gave me my low-hanging objective. That's literally it. Just gave me that low-hanging objective. It was inside the imbalance, of course, in a premium or approaching a premium here. And that was the approach that I took with it. Now, did I figure it was going to exceed that? Of course I did. I figured it was going to stretch all the way up to that 20 level as well, or rebalances, like all that's valid. The 20 level, you could shoot for that if you wanted to. This is why I'm saying, like, you could get good risk reward on these plays too. It's really just how conservative you want to be with it, and how long you want to hold it, really. I don't like holding stuff that long. I like being in and out. I like being, because I'm content with singles. I know singles add up. It compounds. That's how I approach it. And that's how I approach this. That's why I took profits where I took profits. But again, you could have held out for more. It's just up to you and how you want to do it. But that was the case, guys. It took out external range liquidity. First move lower from news, fake run, down to higher time frame support, lower time frame shift, seek internal range liquidity up above. It is that fucking simple. And it can be that simple. You got to allow it to be that simple. Okay. And that's what we got here. Now, AUD/USD, what's the deal? So this one created really clean equal highs up above right before we had that flush into high impact news. Really clean highs up above, super clean highs up above right there, as you can see. And then news just dumped this thing. And now this one, prior to the news, we actually had previous day's highs and Asian session lows still intact. So it cleaned that out. Big level right there, guys. Big level. And of course, discount. All right. Just like I was talking about with the other plays up above, same deal. It's in a discount in the higher time frame. And it comes down into a 50 institutional price level. Major market reversals occur off institutional price levels. Boom. We get an immediate imbalance right here created. You get that push up right here. Boom. You get that strong close. You have confirmation. That's a shift. Once you get that confirmed shift, guys, simply look up and identify your next liquidity pool. There's your draw. It's that simple. When it comes to identifying your draw, you took out this liquidity. We took out previous day's lows. We took out Asian session lows. We had a confirmed shift. Discount marketplace. Look up. Internal range liquidity. Target that. That's your draw. That's what I did. It pulls back into a discount, and then boom, it seeks this internal range liquidity up above, and I lock in gains. Those are the plays, guys. It's that simple. Everything I do just revolves around market structure, liquidity, and time. And I just went over all three of them in this lesson. I laid it all out for you. Okay, we talked about the market structure. We talked about how it was in a discount marketplace, right? And then we also talked about how to identify that shift in market structure after it was in a discount. Okay, we talked about that, absolutely. We talked about liquidity. We talked about how it took out a key liquidity pool. We talked about what liquidity to target, why it wants to target that. And we implemented the time element. What's that? News at 8:30, fake run from news. We understand a lot of times that first move from news, fake run, boom. And then we wait, of course, because I'm not a degenerate, I'm not going to hold through it. I wait for it to get done with. I wait for it to show its hand. And then I wait for the confirmation. As ICT likes to say, wait for the elephant to jump in the pool, right? You're familiar with this content, you know exactly what I'm talking about. That elephant is that shift. Once it shows its hand, game on. We got something, right? So I think that about wraps it up, though. Hopefully you enjoyed. Hopefully you got immense value out of this. If you did, leave a like, subscribe to the channel, and I will catch you later.